Hello and welcome to The Bottom Line on TVP World. This is where we unpack some of the main economic and business stories of the day. I'm your host, Marie Cato. So earlier this year, Central and Eastern Europe was mostly calm upon hearing Donald Trump's announcement of his incoming protectionist economic policies. Now that the chaos and instability are setting in, the analysis and mood are changing. As global tariff reality kicks in this month, we are beginning to see what Trump's tariffs might really mean for Central and Eastern European countries. Let's see what Jan Kennedy's feature reports.
Global tensions are on the rise after Donald Trump announced a wave of reciprocal tariffs, triggering a wave of responses around the world. China has warned it will not back down after being threatened with a new 50% levy after it matched the US's initial tariffs.
If the US persists in disregarding the common interests of both countries and the international community and insists on escalating the trade and tariff conflict, China will, as always, fight to the end.
The European Union on Monday had its offer of 0% tariffs for cars and industrial goods rejected by the US. For now, it is sticking to a diplomatic approach.
And I repeat, and I will keep repeating until I'm blue in the face, we don't want tariffs. We want to avoid them. We didn't start the situation. We're trying to fix it. We're waiting for our American counterparts to engage in a meaningful way.
EU Trade Commissioner Mateusz Dadej stressed that the impact on the 27-nation bloc would be severe, affecting hundreds of billions of euros in annual exports.
A range of tariffs is hitting a significant portion of EU exports. In fact, 380 billion euros worth of EU exports to the US. So we are talking here some 70% of our total exports.
Central and Eastern Europe will not be spared, with US tariffs expected to dent the region's economic growth. Poland among the countries affected.
I think the impact on Poland, on Polish GDP, could be below 0.5, so 50 bips, you may say. Next year might be more difficult, and also the cost could be higher. But I understand that we are in the process of beginning of negotiations.
Erste Group, one of the largest banks in the region, says in its newest report that the impact of tariffs will be relatively contained, trimming up to 0.3 percentage points off economic growth in CEE countries in 2025. In 2026, however, the fallout could be more severe, rising to some 0.4 percentage points, with effects varying across countries.
Those countries are much more exposed than Poland, due to the fact that higher percentage of their GDP is created by international trade, and also by the fact that they are more exposed to trade with the United States.
While an ING analysis affirms that export-reliant CEE economies are likely to be among the most affected, it challenges the narrative that their vulnerability stems from their ties to Germany, which appears to be among the least globally integrated. On a more positive note, markets seem to have stabilized after last week's bloodbath caused by the tariff announcement, with major indices edging up slightly on Tuesday.
It's a breather. Whether the bottom has been reached is impossible to predict. It clearly depends on the statements made by Donald Trump. Another punitive tariff with China is on the horizon, so the markets will continue to fluctuate greatly.
As a side effect, yields on Polish bonds have fallen, providing some relief to the Ministry of Finance.
Poland has those excessive borrowing needs this year, and so this elevated demand for safe government bonds is something Polish Ministry of Finance can take advantage of.
The coming days will reveal the results of negotiations between the US and the tariff-hit countries. Until then, uncertainty persists.
So it's one thing for global leaders to post tweets about staying calm and entirely another to see markets plummeting or making the decision to suspend trading for an hour, as we saw in Warsaw yesterday. It's all getting very real. I'm joined by Mateusz Dadej, Chief Economist for Central and Eastern Europe at Coface, to share his insights about what Trump's tariffs mean for us in this part of Europe. Hello, and thank you for joining us.
Good evening.
So now that Donald Trump's tariffs are kicking in and causing real havoc on international markets and also here in our region, are we able to assess the incoming impact in our part of Europe?
Oh, well, the thing is that it's going to be probably tremendous in the sense that, well, of course, it's hard to predict and hard to assess in general. We can only speak in terms of range of the impact, but the key point is that it's going to be absolutely tremendous. It's going to be negative, and it's going to affect all of the countries in Europe, and I would say mostly, especially the countries in Central and Eastern Europe, which are heavily integrated into the supply chains of international trade, right? So yeah, we are heavily open economies. Poland, on the other hand, well, we have a bit bigger domestic market, so we are not that much dependent on exports, but there are countries like Slovakia, Estonia, Baltics, which are going to be, disastrously affected if the actually very much negative scenario is going to materialize, a negative scenario of the trade wars. So we will see a huge escalation. So yeah, the effect is going to be absolutely huge, and we'll see. Well, first of all, the countries that will have a huge share of the exports going to the USA, their value added that goes to the US is bigger. So I would say that those countries are most likely to be like Slovakia, Hungary, that are going to be affected the most. And well, the other thing is, of course, the kind of second round effects. So one way to think about it is that we have this direct exposure coming directly from USA and particular countries, but of course we also have a multitude of second-order effects. So like a transmission through Germany, which is the biggest exporter to US in Europe, and of course, as we all know, the Central and Eastern European countries are also heavily reliant on the trade with Germany. So in this kind of transmission of the shock, it will most likely happen, and it will have a dire effect.
On Monday, as you saw, we interviewed the former Prime Minister of Poland, Jan Krzysztof Bielecki, about the impact of the tariffs on Poland. He had a slightly different opinion. Let's just take a look at what he had to say.
I think the impact on Poland, on Polish GDP, could be below 0.5, so 50 bips, you may say. Next year might be more difficult, and also the cost could be higher. But I understand that we are in the process of beginning of negotiations.
So 0.5% could arguably still be a lot. Some could say that maybe it's not as significant as it could be. But Poland has often been put on a pedestal as a role model in terms of its economy, the growth of its economy, the structure of its economy in our region. Can you tell us what elements of Poland's economy could potentially, possibly safeguard it from the impact of the tariffs, if at all, if we're being perhaps optimistic like the former Prime Minister?
Sure. So, as I said, I think one of the key characteristics of Poland is that we have a huge domestic market. I mean, huge in a sense relative to other Central and Eastern Europe. This means that the exporters can seek actually alternative markets here in Poland rather than try looking for somewhere abroad. Once the actually international trade is going to, well, not collapse, but of course it's going to be hit substantially by the trade wars.
I also wanted to look at some of the other economies in our region and look at some of Erste Group's research, if we can just bring up that visual up on our screen. So it appears that Hungary and the Czech Republic are the most exposed in terms of the harshest outcomes of Trump's tariffs in our region. As we can see, that little yellow block on the top is that downward revision of the GDP growth. And how did their economies differ to Poland or the Czech Republics? Can you just tell us a little bit about their profiles?
Sure. So, for example, Slovakia is heavily reliant on the automotive sector. So around quarter of its export is actually automotive, and actually the blanket tariffs that were announced last Friday on the Liberation Day they are actually all of the products, but before that, Trump actually introduced a tariffs on automotives, which are higher than those 20%. So automotive sector is going to be hit even worse, and that's most likely the case. That's why the Slovakian economy is most likely going to be affected, most likely the most. Right?
And what about Hungary?
Yeah, as well, right? So they are heavily reliant on trade with USA. Their value added is a lot of their value added goes to the final demand from the US, and so that's a very similar story. They are just there's a lot of direct investments there from at Hungary, organized by USA, and that's I think the case.
And what do you think of the numbers that Erste has presented? Do you agree with their forecasts, with their numbers?
Yeah, I would say they are rough estimate. I would say these are educated guess. I'm sure they all know that this is basically a point estimate. But the thing is that this is, of course, this should be more like presented as a range of possibilities, because we should think really in this case as more like a scenario view. So whether the trade war is going to escalate as it's escalating right now, or actually maybe Trump is going to internalize the stock market fiasco that we saw and maybe back down from his trade wars. So those are two opposite scenarios, and it's really just taking average of these different scenarios wouldn't really say much. But I would say indeed the direction is of course positive. So direction is of course correct in the sense that we will see decrease a lower forecast than before the Liberation Day, and that's definitely in this case true.
I think everyone is just desperate to get an idea, like to just gauge where we're heading. And I think with every single day there is some kind of event that occurs. Like yesterday we had the Warsaw Stock Exchange suspend trading for an hour. That was very unexpected. There are all sorts of opinions as to whether that was a good move or not. But how much time do you think, from your expert opinion, do we need to wait to get more of a complete idea of where we're heading?
Sure. So I think the next step should come from European Union, and they are not really in a hurry, right? So
this is a matter of 3 weeks, 4 weeks, is it?
Probably
3 months?
2 weeks, 3 weeks. Well,
Okay.
the case is that, in a dark room, you move in small steps, but you don't run. That's why European Union is not really in a hurry. They are really planning their tariffs accordingly. At the same time, maybe trying to renegotiate the trade, trying to maybe go 0 for 0 tariffs. So that's, I think, the plan for the European Union, and I think it's correct the approach to be more careful, right? To be more planned, less depending on the current sentiment.
In our region, Germany is the main trade partner at the end of the day. Do you think that the recent fiscal stimulus developments in Germany can in any way protect our region from what is happening at the moment vis-a-vis the US?
Yes, I would say that this is definitely a positive news for our region. But having said that, the fiscal package, first of all, it won't take effect this year. The only effect from the fiscal package is actually the announcement itself. So we already see the improvement in the sentiment, in the business sentiment in across the German manufacturing. But on the other hand, this fiscal package is going to be, first of all, implemented or take into the effect actually next year, at the beginning of the next year, more or less, and then spread more or less evenly throughout 10 years or so. So we won't see the effect accumulated in a single year. We won't see a boom of whatever. However, that's definitely a good news for the region, for Czech Republic, for Poland, of course.
Do you think that the tariffs and the impact of the tariffs can in any way be contained?
Yeah, I would say that they might offset a bit this kind of trade wars, but I would say the scale of the trade wars, and if actually the current pace of the escalation will keep up, then I don't really think it's going to be better than that.
Okay, so we're heading for a bit of a
Yeah, I would say
difficult time. I wanted to bring up another angle to the story, which is the global value chain. ING brought up an angle to this in terms of the region's integration. So I just want to bring up another visual because they said that our region's integration into the global value chain isn't that high. So I just wanted to quote a little bit of their research. It said that headlines claiming that Central and Eastern European countries are highly vulnerable to the tariff wars due to their exposure to the EU and Germany should be viewed with skepticism. So here we have this visual. We see Poland, the Czech Republic, Hungary, Slovakia, and obviously we have Germany at the very beginning in this lineup. What are your thoughts about that?
Yeah, so this basically shows that there are some small and open economies in Western Europe, but indeed, just as I said, I mean, Hungary, Slovakia being the most kind of affected. I would definitely agree with that. Yeah, there's one thing that's the one perspective, but also we can check, for example, on the trade pattern, because the blanket tariffs were not really implemented across all of the product categories, and there are some countries that, for example, export more pharmaceuticals, which are as of now exempted from this tariffs. So I would say this is one way to think about it, but of course there are some products, part of the production chain, that's shown that's not going to be affected by the tariffs. So for example, so far Ireland, well, it's heavily reliant on the export of pharmaceuticals, but so far it's not really, it won't be affected, right? Even though it's most likely Trump will most likely announce the separate tariffs on the pharmaceuticals, but we'll see about that.
Okay. I want to talk about the idea of the whole economy. So, you know, for let's say regular people in inverted commas, they're interested in how these tariffs are going to affect them on an everyday basis. You know, you read the headlines, but at the end of the day, you want to know how it's going to affect you, the bills you pay, and how is this going to affect particular people, perhaps people from particular industries, and I mean specifically in the Central and Eastern European region, not the US.
Sure. So actually, in the tariffs that are going to be implemented by European Union are going to be very narrow. So we will see a particular categories that are going to be tariffed. And for example, for these, definitely we will see an increase in the prices. On the other hand, we know that there is a separate front line between USA and China, and the tariffs are even way higher than 20%. So today I think it's around 50, but there are some threats from Donald Trump that he might as well just increase it up by the next 30%. And this is going to absolutely stop the Sino-American trade, right? So and at the same time, the manufacturing or the production in China is above its capacity. So they are basically producing too much given their domestic demand, and they are seeking different alternative markets, right? And I think one of the alternative markets here, given the blockage of the
do you think we're going to be flooded with Chinese
produce? Yeah, exactly. That's exactly what I have in mind, and the European Union actually needs to kind of renegotiate, on the other hand, the trade relations with China as well, so that we won't see the flooding of the Chinese products, very cheap on one hand, but that's going to be absolutely disastrous for domestic manufacturing.
Do you think the cost of living is going to go up significantly for?
Well, there are separate, different products that most likely going to go up, and there are some products, for example, electronics, that just the manufacturers in China are at their peak of capacity, and it's going to be actually directed to our European markets. So in this case, for example, those electronics are going to be definitely perhaps lower.
Okay, Mateusz Dadej, Chief Economist at Coface, thank you so much for joining us today.
Thank you.
And that wraps up the bottom line for today. I was your host, Marie Cato. We're on every weekday at 5:10 CET on TVP World. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.